Welcome, guys. What a joy to have you here again. Remember that this is Chio Knows. We're going to learn a lot about accounting and finance and life in general. To the new guys who are just entering, I'm so glad to have you here and I hope you stay with me the whole thing. Today, we're going to start with the basics of accounting. The basics of the basics, which is what are the 5 basic accounts in accounting. And as I told you before, accounting was invented by an Italian monk, and he assumed that everything in life, it's only either one of the 5 accounts that we will mention here. And I will tell you the difference, okay? So it's kind of confusing because normally we think in revenues and expenses and everything, thinking about cash. In accounting, it is not about cash. That is like the first rule. I will talk about first the difference between assets and expenses, okay? So there are 5 accounts. I will start with this pair first. I will talk about assets and the difference between expenses, okay? Okay, assets for me are in under assets in accounting, I can include 2 things. And the 2 things that I can include, it's all of the things that the company owns, like land. Let's give example. Think about everything that a company could own. Things like land, equipment, what else? Machinery, computers, cash, for example. It is an asset for the company because the company owns that cash. So cash, it is an asset for accounting, okay? But besides things that I own, included as assets are also every right that I have. Rights. Rights like what? For example, the typical example of a right could be maybe a patent. A patent will give me the right for me. If I invented a product, I would only have the right to sell it. So if that gives me a right, that would be an asset. But another, or the trademark to use the name of a product, or for example, accounts receivable. That would be a very good example of a right. Everything in accounting, guys, that has this word receivable, it means that somebody, you have the right to collect from somebody. Somebody owes you. So if you have the right to collect, it is an asset. So anything receivable, accounts receivable, documents receivable, notes receivable, interest receivable, it means that you have the right to collect them. So those, for you, that will be assets, okay? But for example, expenses. What are expenses? Everything I pay? No, I told you before that cash is not important for accounting. So if you force me to give you like a definition of expenses, yes, these could be resources going out of your pocket. Resources going out, which is the same as paying. What's the difference? Going out of your pocket. But that is not the main idea. The main idea for something in accounting to be an expense, the keyword, the most important thing is that it has to be used. This is the keyword. So for example, if you already paid for it, for example, a car. Let's say that I bought this fancy car. Woo! Why don't I deserve it? Of course. So I bought this expensive car and I paid a lot of money. And when you go with your friends and you want to show off and so on, you will say, I spent a lot of money buying me a car. But for accounting, that amount that you pay for the car, it is not an expense. Why? Because you haven't used it. A car, it's an example of an asset. Why? Because I haven't used it all. The car, when it gets used, it is an expense that the accountant calls depreciation. Have you heard about it? So it's an example of an expense. Depreciation is the part of the car that has been already used. And let's give another examples of expenses so you have everything clear. Everything you pay for your operation as a company will be an expense, but besides, it is not important if you paid it or not. The only important thing is you already used it. So for example, think it like with simplicity. What do you pay every month? for your company? Well, I pay salaries, I pay public services, water, internet, and so on. Public services. I pay for maybe training or taxes, of course. Taxes, how could I forget them? Hi, my goodness. So, of course, I have to pay for them. But the key word is they have to be already used for them to be expenses. So, for example, an insurance could be an example of an expense only if it has been already used. For example, if I pay the insurance at the beginning of the year, January the 1st, I pay the complete insurance for all of the next year, in that case, insurance would not be an expense. Why? Because I haven't used it. So that prepaid or that insurance paid in advance, that will be an example of an asset. So here, another example of a right will be this insurance or everything paid in advance. Paid in advance. And I will double cross it. Every time you see for an account paid in advance, that will be an asset. Why? Because if you paid it in advance, it means that you have the right to use it. So for you, it will be an asset. So bottom line, what will be the main difference between assets and expenses? When you pay something, how would you know if that you pay, is that an asset or is that an expense? Just make yourself this question. Every time you pay something, when you pay, just ask yourself, have I used it all? Have I used it all? All of it. If your answer is yes, if you have already used it, then that will be an expense. If that you paid, you haven't used it all, it means that you have the right to use it. So if you haven't used it all, then your answer, this will be an asset. Okay? Is it clear? Just to clarify on the difference between assets and expenses, expenses are expenses when you use it. I don't care if you paid it or not. You don't have to pay them for that to be an expense. The only important thing is that you use them. And another thing about expenses, all losses are expenses. So now we will talk about two other basic accounts, which will be, what will be the difference between liabilities and revenues? So liabilities for me is the easiest account. Liabilities, it's the same as debts. So every debt that you have or obligation of doing or paying something in accounting, that will be a liability. So for example, a bank loan, that will be a liability, or anything that you have to pay, any accounts payable, notes payable. So everything payable. Remember, an asset, I double cross the word receivable. It means that you have the right to collect. It is an asset. Everything payable will be a liability, because everything payable, it means that you owe. So if you owe, you have the obligation to pay, and that for you, that will be a liability. So interest payable, salaries payable, anything payable will be a liability for you. Okay? So liability is very easy. What about revenues? As I told you just a few minutes ago, expenses and losses, it is the same thing. So revenues and gains, all gains are revenues. All good things are revenues, all, which are gains. All bad things like losses will be expenses. Okay? And if you remember when I tried to define expenses, I told you it's resources going out. So revenues will be resources coming in. Exactly the opposite. These will be resources coming in. But that is not the important thing. Remember that I told you that cash and accounting is not the same thing. For something being a revenue, I don't need to collect it. I don't need the cash. What is important, what do you think will be the main revenue of a company? The reason number one for having resources coming in, of course, sales. Or if you give a service, fees earned or services. But I will put the example about you selling stuff. So that will be sales. So sales, which is the typical revenue, sales will be a revenue for accounting whenever you deliver the merchandise to your client. That is the keyword. The keyword is to deliver either the merchandise, or if you give a service, if you deliver a service. I don't care if you have collected it or not. So cash is not important. This is the keyword to know that I have sales as a revenue, or fees earned, or services delivered, that will be a revenue, not when I collect it. Okay? So for example, another example of revenue, it will be like any gains. Gain on the sale of an asset, or interest, not when I pay them, but when I gain them, gain interest. So everything that is coming to you as a reserve company, that will be a revenue, okay? Sales will only be a revenue when you deliver the service. Let's consider this case. Let's say that I'm selling again these markers, and let's say that these markers are so nice that I'm going to sell them, collecting them in advance. So I'm going to collect the cash from the sale of these markets today, but I will deliver these markets to my clients, let's say that 3 months later, okay? So today, when I'm collecting the cash from these markers, is it already a sale? Is it already a revenue? And the answer, just make yourself a question. Have you already delivered the merchandise? Have you delivered the markers? No, you haven't. So that thing that you collected, which is cash, it is not a revenue. Remember that always in accounting, two accounts are affected. I will have to do another video about the debit and credit. But in the meantime, I will tell you that you collected cash, which is an asset, and the other part, which will be affected, it is not a revenue because you haven't delivered the merchandise to your client. So what would that be for you? Well, if I'm collecting something and I have the obligation of delivering that merchandise to my client, if I'm obligated to do something, that will be a liability and not a revenue. So everything that you collect in advance, anything collected in advance, merchandise collected in advance, interest collected in advance, anything collected in advance, that will be for you a liability, because if you collect it in advance, then you have the obligation of doing something, which is a liability. If you pay, if you're the one paying in advance, that for you, that will be an asset, because if you paid in advance, you have the right to receive that service. Okay? So bottom line, it's not important collecting, even though if you haven't collected anything, if you deliver the merchandise to your client and your client hasn't paid to you, it is already a revenue. So revenues are not important, they have been collected or not. But in case that you collect something, when you collect something and you don't know if that amount, that cash that you collected, so if I collected something and that cash that you collected, you don't know, you have the doubt if that should be a revenue or a liability, make this question to yourself. If I collected, have I already delivered the service? Have I already delivered either the merchandise or the service? If your answer is yes, if you have already delivered it, I don't care if you have collected it or not, that will be a revenue. But if you haven't delivered that merchandise or that service to your client, if your answer is no, I haven't delivered it, and if you have already collected it, then you have the obligation. So in this case, this will be a liability. Okay? So we're talking about the last of the 5 accounts. We will talk about equity, which somebody could call it stockholders' equity or owner's equity. It is the part of the company which is owned by the owners or the investors. Okay? So 2 main things are included under equity or stockholders' equity or owner's equity. And the 2 things that are included for the first part, that will be contributions. Contributions from stockholders. So that will be stockholders' contribution. Stockholders' contributions. So for setting a corporation, you have to put money, and then the company will give you stocks, which tells you that you are the owner of that company. So every money that you put inside the company to become the owner, that will be part of equity or contributions, which normally in accounting, this is called capital stock. Capital stock. Okay? So capital stock is the money that was contributed by the investors in order for them to become the owners of a company. Okay? Because the beauty of having a corporation, guys, is that legally you as a person and the company are 2 different persons. So if for example, if the corporation asks for a loan, the one that is supposed to pay is the corporation. The bank cannot go directly with me as a person and take out my house or anything, because the corporation was the one who asked for the bank loan, not me. Okay, so that is the first part. Stockholders contribution, that is the money that the owners put inside, so that will be part of equity. First part, contributions. The second part, that will be, this is called normally retained earnings. Retained earnings. So retained earnings, it is the same as the cumulative or accumulated earnings. Accumulated earnings. So every time you do a profit, we will see in videos, in some videos ahead, in which you have to determine the profit and loss, or also called the income statement, in which you have revenues minus expenses. That will give you either the profit or the loss, or the same as earnings. Profits, earnings, exactly the same thing. The different thing is that these retained earnings, these will be the sum. Do you know this sign? The sum. The sum of all of the profits or earnings of a company, which are revenues minus expenses. All of the profits that I have made during all of my life, the accumulated profits of the company. And if I have a corporation, based on those profits, maybe I will decide, the chief will decide if those profits should be like distributed between investors, and that is called a dividend, a distribution of profits among the investors, among the owners of a company. So these will be subtracted, because if I decide to give these profits to the owners of a company, I will have less profit. So that will be minus the dividends paid to investors. Okay? So bottom line, these retained earnings are the sum of all of the profits that I have made minus all the profits that I have already gave away to my investors, to the owners of a company. Okay, so these are the 5 basic accounts. Look for more, because I will do exercises in which we apply these concepts, just so you have them totally clear. In the meantime, what are you waiting for? Go to my channel, subscribe, and put a little ring, and put a like, and everything. I'm waiting for you in all of the places: Instagram, TikTok, whatever, Facebook. Look for me under Chio Knows. I'm waiting for you.